Yo, 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 yo. Hey, 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 hey. Euro USD, USD CAD, and even Euro ZAR are flipping in flip zones. Let's go. Bum, bum, bum. Those are some good veggies. Hey, good morning, everybody. My name is Wayne. I'm the Chief FX Market Strategist for Traders Way. Let's do some trading today. Some things are back at their flip zones. Euro dollar is, we're sort of in the moment of truth, and some other currencies have already flipped, so we'll see. Maybe there's a flip, maybe there ain't a flip, but at least we know the right price and at the right time, and we happen to have both put together in this webinar today. Let me please ask you to, first of all, treat everyone else in the chat with respect. Let's keep the chat professional. You're in my office here. What else? Please visit Traders Way, open up a trading account. When you're done downloading your MT4, come back to this webinar and you can have all my chart templates, all my chart profiles, all my indicators, including these pivot points, for free. Yeah, simple enough. If you need additional training than just me coming in for an hour a day, if you need some hardcore training, both technically and fundamentally, please visit fxbootcamp.com. Also, I appreciate the likes and the comments and all that kind of stuff, so please do that. If you are new to these webinars, please subscribe. I do them every morning at 7:30 a.m. New York time. Without further ado, let's get on with it. So get on, you mate. So I hope you open that account at Traders Way. They're making this available to you for free. I used to charge about $300 a month to do these webinars, so thank you very much to Traders Way for making this available to you. They want you to succeed, and the way that you pay it back is you open an account. So make sure you put that on your to-do list. Find awesome success. Open up a live trading account at Traders Way. Okay, let's get out of these exotics. Let's go to whatever. You like the monitor setup, Jim? Yeah, it's different. This is a newer one, so I used to have a bunch of these. You know what? Maybe we should go back full cam. Okay, I used to have a bunch of these. Oh, I used to have a bunch of these 1080s. So I had 18 of these screens. Okay. And then I got rid of them, and then I replaced the three middle ones from here to here. I tried one 75-inch 4K screen and then 6 screens around it. And it was all right, except it was only 4K, and I realized 18 1080p's is more than one 4K. So the resolution, I lost on resolution. I lost real estate. So I got rid of that thing, and now I've tried this. So it's one, it's 1, 2, 3, 4, and 5 screens, and they're all portrait, and it works pretty good. I can't say I'm super happy, but it works pretty good. I think what I'm going to do is 3 by 3. So I'll get one more. So anyways, yeah, it's all right. It's essentially the same as the 18 1080p's. But higher resolution, better color. Well, not higher resolution, I guess, just less screens. Less heat is a big issue. Yeah, Jim Rogers, he's the commodity guy. Have you read Adventure Capitalist? That's one of his books. Oscar, you might want to check that one out. I was at a conference with him, oh, many years ago. And well, not with him. He spoke while I was at the conference I was at. And he was talking about how commodities were going to change the world. And then later I was flying to China. I think it was my first trip to China. I was in Beijing and then Chengdu, met with the government officials there. I was invited to sit in the People's Hall, met with several reporters. I spoke at a conference with 40,000 people, and then had lunch and dinner with the governor of Sichuan province and the mayor of Chengdu and all their staff. Um, it was pretty good. I remember flying to go on this adventure and thinking about Jim Rogers, and you know, one of the main focal points of his thoughts at that time was, you know, China was going to rule the world, and they're going to buy up all our commodities. So, anyways, he's an interesting dude. But Jim Rogers worked with George Soros at the Quantum Fund. So I guess since I worked with George Soros and Jim Rogers worked with George Soros, we're all within 3 degrees of separation, you know. But anyways. Brooke says that's 80 pips, not 800 pips. I'm not sure what you're talking about, but it's interesting. Now that the world has gone to fractional pricing, so I'm old school. By the way, I was just reviewing spreads the other day. The spreads on Trader's Way, and I mean variable spreads, right? I don't mean an ECN. I don't mean a fixed spread. The variable spread account. The spreads are so ridiculously low compared to when I started. It's just unbelievable how low the spreads are. You know, like pound dollar, I think used to be like 7 pips, and you could get euro dollar for a little cheaper. It was like 5 pips, but like pound yen was like 12 pips. It's amazing that you're picking these things up for 1 or 2 pips. But then we went to fractional reserve, right? So, or not fractional reserve, fractional pricing. So now you're not paying, you know, 5 or 6 pips. You're paying, you know, 1.4 pips, 1.8 pips, 1.1 pips, right? But that fractional, that 0.1, it's not just a pip, it's 0.1. A lot of people misinterpret when I say get 1,000 pips. Their interpretation of that is they're looking at the fractions and they're counting the 1/10 of a pip as a pip. So when I say 1,000 pips, you're thinking 100 pips, right? 1,000 pips is $10 basically, right? 100 pips is a penny, right? 100 pips is a penny. So I guess 1,000 pips is 10 pennies. Okay. And so yeah, so someone says 800 points equals 80 pips or something. So I don't know what the conversation is, but yeah. So it's just interesting. It's never been a problem, but it seems to be a misunderstanding that's occurred multiple times recently. So anyways. All right, let's take a look at this. That's actually what we drew yesterday. And, well, time has moved, but interesting, right? Double bottom. Okay, so we have this completed. So there's one opportunity. Okay, now the next one will probably look something like this. Okay, and we should be returning not just back to this 200 EMA, but really the top of the channel and all that kind of stuff. So let me update the regression. And by the way, I hope you're happy that we talk about these potential reversals days before they happen, as they're happening, and then now we're following after it's happened. Okay. So if we're breaching this area, eventually we're going to reach this, which is interesting because that's the same as the 200 EMA. Okay. So here's the euro dollar I was talking about, and then the CAD. So before non-farm payrolls, we talked about this being a key level of resistance. And then if you were going to be a bull after the news, which was bullish for euro dollar, that you wouldn't be buying it during these green candles, you'd be buying a pullback to this level, which we now have received. Okay. Now here's the moment of truth I was talking about. We need to drop down to this 55, in which case we'll probably do something like that in the future, or it's going to break and ride the 21. Okay. And no, I can't tell you which one. It'll probably look something like that. What is Odette? I have no idea. Okay. So you're going to have to decide which one you're going to be. I wouldn't be a buyer here, though. Like, you should know what my preference is to let it break to the upside. So let's say it's bullish. I'd rather buy this. I'd rather buy here than here. Okay. And then, of course, if it's going bearish, it's going to drop. Go like that. Now, I wanted to look at the flip side of this. And I don't have it here. Don't have it here, so we'll have to go on a little journey. I probably have it here. Here. So we have to ask ourselves, is this reversing? Okay. If so, this is probably a next week trade. Still, we'll see what's happening. We're a long ways away from the resistance, right? So we'll see. If it breaches the 21, typically it goes to the 55, resets up the 55, drops back down, either double bottoms or hits a roll reversal. Either way, it would go up around this point and then head up and then be challenged in this. Probably go back and stay in there. Umit says, can we look at Turkish lira? Yeah, but not versus the US dollar. It's, I mean, well, yeah, okay, sure, fine, whatever. Yeah, we can. It's just the spread isn't great on that one, right? Well, it's great, but not as great as the others. Okay, so you can see last night's sell was here, and it's just kind of slowly working down from there. So it's not exciting, but it would be more exciting maybe tomorrow. But the one I like better is this one. Okay, this was the sell zone yesterday, and you would have caught it and stayed in it. It was a little dicey there for a bit, but now that's working out. Okay. So, fine. It's fine. Right? This is trying to make a lower low. This one's already made a lower low. So therefore, euro is weaker than dollar. Okay. Euro ZAR is interesting too because we needed a pullback. So one of the things I like to do is look at it on a more macro level. And, you know, typically either this zone or this zone is a place to re-enter your trade. So this would be like profit taking down here. And then this would be re-entering the trades up here. And then you throw in the dailies and all that kind of stuff. And you're like, oh, that's a nice little sweet spot. One would expect if you're a bear to try to get short again in there. And then boom, of course, that looks good. Now it could still head back up. But the thing is today and tomorrow, I'm probably going to try to sell something in here. Does that make sense? So Umit, yeah, I prefer Euro Turkish Lira. I missed that comment. So yeah, Euro Turkish Lira is the one I like. Okay. I put a lot of different trades on this. Yeah, a lot of picking up pennies in here because this is dangerously an inverse head and shoulders. But if we can get a lower low, we're on the free and clear plan. Okay. Let's see. Let's take a look at the beast. Right? Sell zone, sell zone, sell zone, sell zone, sell zone. So if you're a bear, you're still looking to get short, but it's been a long time. Okay. I can't be a buyer up here. You had one chance earlier. Okay. You could have been a buyer sort of in here. You can see that this circle area is the best opportunity. And really, if you're a cheeky little monkey, you could be trying another one here. But I think you're too aggressive to do all of that. So there might be a double bottom here. Here's the clear 1, 2, 3. Here's the, you know, the second chance. The problem is I wouldn't call this a higher high yet. So like there might have been an entry down here. There might have been a follow on here. There might have been a follow on here. There might have been a follow on here and here. And now maybe this one. But you can see we're not breaking the granddaddy of all resistance, which I had set up for you guys like 2 weeks ago. Okay. So as long as we're below this dark area, there's a very, very reasonable chance that it does this. Very, very reasonable. And once we breach this, if we go higher, then I'll feel a lot better. Okay. Oops. Okay, but we haven't even breached this, so I can't feel quite bullish yet. The trades are there, but you might be mixing up like mediocre trades for good trades or something. But if you were a bull on this and you had a monthly swing here, I get that. It's a very high risk trade. Not high risk, aggressive trade. But that's where you do it. You wouldn't do it any pips lower or any higher. Like that's a perfect swing. My fear is that you take this and you put too much credence on it. That's the perfect follow-on for this, but I won't feel good about it until next week if it's going up. Okay, but there's definitely up on these charts here and maybe here and maybe here, but you got this trade and this trade and this trade ends up being, let's say, technically the same type of trade, the same trade. So if you've added 3 trades there, you've just added 3 times the risk. It hasn't changed the potential break or not, because if it's going to drop, it's going to drop now. And if it doesn't drop there, it's going to drop up here. Okay. Kiwi dollar. Are you guys trading Norway? Norway's going to raise interest rates. Well, instead of doing pound dollar, I mean, look how straightforward these trades are. Yeah, this is a very straightforward weekly trade. Look how easy that is. Okay, down, 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 down. So you might have missed this. I don't know when I did this. I guess maybe I did this just yesterday, but that's a very clear buy zone. If you're a bull, and I imagine if I was doing the swing trading group, I'd say if you're a bull on the new positive macro news, positive meaning the Fed might cut interest rates, then this is the trade plan. If you're a bull on macroeconomics. Okay. Now remember, when I start this new trade planning software for you, or service, should I say, it's going to ask you, what is your global macroeconomic outlook? Okay. That's what it's going to ask you. And the way I'm setting up the model is you will start with a 3-month bias. You can't change it over the course of those 3 months. Then it'll move to month, and you could possibly, technically, if you wanted to, once a month change your bias from global macro positive to global macro negative to global macro positive to global macro negative, but it won't reset until the new period. And of course, if you're doing this, you're terribly, terribly, terribly confused, and you might have mental problems too, right? I'm happy, I'm sad, I'm happy, I'm sad, I'm happy, I'm sad. So you don't typically change your fundamental bias very often. For me, I change every 5 or 6 or 7 years. Okay. So anyways, the benefit of that, of course, is you're not trying to figure things out while things are happening. So if you were simply a bull on global macroeconomics and we were here after non-farm payrolls, you'd say, oh man, if I see a pullback to here, I'm buying. And you're done. And it drops down to here, and then you buy. And now you're making money. Yay! Versus swinging both ways like a broken gate. Oh, it's made a higher high. I guess I should buy. Oh, it's made a lower low. I guess I should sell. Oh, I guess ooh. And that's it, right? Okay. So let me change this just to mix things up for you. If you're following central banking policy in the G20, you may have noticed that Norway might be raising interest rates. Noki, I don't really want to do Noki dollar, but I guess we could. Is there Noki something else? Euro Noki? Yeah, let's just do USD Noki. Okay. What do you think about that? Notice the breakout? There's the range. Okay. Boom. Down, 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 up, up, sell. And we'll see. Could be interesting, huh? Could be a rabbit, could be. Raising interest rates. And then you got Euro Noki Noki. Not much going on. Pound Noki. Norwegian Krone. Norwegian Krone. So if you're a swing trader, this was a sell. Didn't get anything here. This was a sell. This was a sell. And this is still a sell. So, whoa! Don't, and then not a lot, a little bit here, and then a little bit more here, and maybe there'll be a little bit more here. Okay. What commodity affects the value of the Norwegian Krone? What is the major export? This doesn't sound anything like a Norwegian. I have a lot of nice Norwegian friends, and they'd probably punch me in the face if they heard that. Oil. Yeah. Yes, oil. But you have to be careful, susceptible to lower oil prices, right? Well, oil prices are already low. They have been low already during this period. Okay? Do you know what I'm talking about? So, okay, pick your battles. But, I don't know. Here's what I think. And again, it goes back to having a bias. And one that's on macroeconomics. So my bias doesn't change that much. So oil, the message on the street right now, if you talk to, psst, hey buddy, do you want to trade some oil? back alley oil traders, right? They're stuck in the here and the now, and I'm not stuck in the here and now. So there's a lot of oil in the market right now, but what all these people keep forgetting to tell you is there's supposed to be a lot of oil in the market right now. Yes, the United States has produced more oil than it ever has in a million years, but for a million years they didn't produce any oil. They kept it for themselves. But anyways, fracking's of new technology, and now that money is cheap again, of course, all that's been leveraged up. So whatever. Here's what I'm thinking. The summer season's supposed to have a lot of oil. We're supposed to be at peak oil around now. I mean, literally, years ago, 10 years ago, I was telling you this information, that this is where we're supposed to have a lot of oil. Now, by the time October hits, we won't have a lot of oil. And, you know, and maybe as we get closer to the end of the year and closer to the beginning of the true political cycle in the United States, where we get pretty serious about the next election for president, you know, some of these deals that are dangling out there, these loose ends that are out there, will probably be signed. When they do, again, the macro will improve, right? So it's just like one of these things. If we're in a period of general oil weakness right now, I'm okay with that. Even if I'm a bull, I'm still okay with that. I don't have to buy it. Okay? But I don't believe it'll be this way forever. Right? And you can see like Norway's doing great against the pound, but of course everyone's doing great against the pound, right? So let's just look at oil. Okay? I look at this and say, okay, it's bearish. And that's that. Okay? And if you have a bias, you're able to pick these up. Like this is clearly a bearish sell zone. Okay? This is clearly a bearish sell zone. This is a monthly play. This is the follow-up weekly play. That's very easy trading. Like you could do that almost with your eyes closed. Okay? But one day we're going to change gears and I'll be able to take it. Now, if I was trading this religiously as a bull, okay, that was a buying opportunity. And I've either been stopped out or I'm about to be stopped out. But even then, I wouldn't lose a lot of money. I would simply be buying at the one price I wanted to buy this month. If it didn't work out, hey, you know what? I took the opportunity. If you're afraid of losing money, you're in the wrong business. Okay? You should probably build a nuclear fallout shelter in your backyard. Okay? Forex is for the strong. Not for the stupid, okay, but for the strong. In the sense that you understand this is not a bullish trend, but yet you are still a bull. So you pick out the one price you might be interested in, and you take the one price you might be interested in. And if it doesn't work out, you're not going to be shocked, but you're not going to lose a lot of money, but you had the opportunity to make money. But more importantly, you're still doing your job. And when this changes, you'll be spot on and you'll be making big money. So you won't be a hero this month, wah. But, you know, by September, October, November, you'll probably be laughing and everyone will be calling you a genius. Yeah, that's how it goes. Okay? But you'll be ready because you're planning. That's what plans are. Okay? So bears are winning this. This is a bear zone. Not quite a bear zone. Well, not. I'm looking weekly, but monthly definitely. And then what? Yeah, but you should have shorted this on Monday. I mean, that's the whole thing. Like, what I don't understand is when people get excited after it's fallen. This is your sell zone on Monday. Like, actually Sunday for me, right? If I was trading this religiously, I would have been short this on Sunday. And I'm not even watching this. Like, I wouldn't even care. And, you know, and other people are messing around with all this garbage and nonsense and planning things late. And after the fact it's happened, now they're trying to sell. It's the wrong way of doing this. This should have been a Sunday trade, and you're done. And it's working its way out. And you're like, yeah, I know. Right? Very simple trading plans. You're a bear in a falling market. Or to say differently, you're a seller in a falling market, right? No. It's not. You're missing the point, okay? So this is a sell zone, okay? This is a sell zone. This particular week it was here, so you didn't quite get it. And this is a sell zone, okay? So if you just know some basic swing trading, I mean, look, the trend is clearly down, right? You don't have to be a rocket surgeon to have some of these plans, okay? Okay, Iron Man? The problem is people don't plan. That's the message. So don't get lost and change the message, Iron Man. What people miss is that they don't form the bias, and they don't formulate plans based on their bias, and therefore they miss trades. They miss most of their trades. You have the ability to see the chart. No, dude. Look, okay, Iron Man. Would you agree this has been a trend for several weeks now? Can we agree on that? That was not hindsight. That like on Sunday afternoon when the market opened, for me it's Sunday at 5, but maybe for you it's Monday morning, but whatever, at the beginning of the week, could we at least agree that there's been a downtrend? Iron Man? Hello? Can we agree to that? Hello, Iron Man? Yeah, of course, right? Iron Man. Yeah, okay, good. So Iron Man agrees. Great. All right, so based on that, when the market opened on Sunday, this was your trade. Okay? That's it. The interesting thing is not even like the accuracy is within maybe 20 cents. This has nothing to do with where we are now. I couldn't care less. Okay, so like for example, every week I host a swing trading group. Mostly on Fridays, but sometimes on Sundays. But I would do this. This is such a Wayne thing. Like this is so straightforward. It's just there's no. I'm not backfilling to look important. Like I do this every day for 15 years. I do this, right? This is just how I trade. To me, it's not even a discussion. It's not even an opinion. That's just how I trade. So if I'm a bear, right? Think of it like it's more almost mechanical. If I'm a bear, this is the price I'm selling at. That's it. I can't even think of another trade here. It's certainly not bullish because if it was bullish, it was supposed to stay above here. Plus, we already identified that we're in a downtrend, so what kind of person would buy in a downtrend? Probably a poor person. They might have been rich one day, but they keep buying in a downtrend. So to me, this is just very definitional, very mechanical. Okay? You see that? Would you agree that 53.80 being broken brought in 55 to play? No. This is just it. As a swing trader, you got to remember, I'm a long-term trend trader based on macro fundamentals. Okay? This is my sell zone based on that information. Okay? Now, the interesting thing is I'm not interested in anything else, really. Okay? I'm not interested in, let's just pick other prices. I'm not interested in that price. I'm only interested in that price here if there's a counter trend scenario. So if we had popped up, if we had popped up like this, Iron Man, then I would look for a counter trend. But like, I don't really care about this price or that price or that price or that price. And if they're psychological, I don't even really care. The only plan I would have as a bear for this entire week is sell right there. Okay? And I'm sure I could get 25 people in this group to confirm that that's what I've taught them every single day for years and years and years and years. And anyone that's taken the swing trading course and taken like dozens of hours of training can do this with their eyes closed. It's that price and no other price. Okay? And this is the target, by the way. Okay. So, yeah, yeah, that's all. Now, could it have continued up? Yes. And you'd use price action for that. Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. But you would still know, based on swing trading, that this is the one price you're vulnerable. And as soon as you saw this happen, you know that this whole other thing's dead. Okay? Yeah, Greg actually sold it there. Jim says every week. Chuck, yeah, confirm. So, right? Yeah, they do, Iron Man. Again, feel free to take the training and join our group. Okay? So, like, if you trade the strategy is very simple. That's a sell zone, not a buy zone. Okay? That's it. That's all. Cool. All right. But I do want to see it go up. It's just not happening at the moment. So we did the USD euro dollar, USD CAD. We did a bunch of things. Now USD Swiss franc. Remember when I said if USD Swiss franc breaks up, euro dollar will break down? Do you remember that? So this is quite a key moment here to see how it plays off the 4-hour 55. And if so, this is coming down because this is going up. So this should have almost perfect congruency. How much is the training? Go to fxbootcamp.com. La 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 la. Oh, you want to do gold? Okay, I'll do gold. I've been staying away from gold since we hit it up here. I kind of walked away. Remember, we had the confluence of weekly and monthly. And what it's supposed to do in this scenario is work its way back. Okay. And because it's not doing so, I'm ignoring it. So if you recall, once we got up here, I said these are dangerous pips and that generally you should just not trade them. If it starts trending above, then never sell. But I'm very, 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 very cautious above this level. Even if it's going up, I don't like it. Okay. Master Grassless is a bit expensive. Well, it depends on how much money you have. Okay. Oops. I believe the training at FX Bootcamp costs less than hiring a golf coach. And let me tell you, your golf coach doesn't make you any money. But whatever. Is that right, Ronald? I've never noticed that. Send me the link so I can take a look. Maybe there's been some sort of update. So let's see now. What should we do? Look at just yen pairs in general. So we did some of these already. We can look at euro dollar. Okay. So the one place to buy was here. Okay. This is a sell zone, by the way. Okay. So far, the bullish move has worked out really nice. Okay. Remember, there was no other price we were interested in. This is the one price to consider buying. It hasn't gone anywhere because it's so bearish. So if you are a bear, at some point as we get closer to the median, you should probably consider looking for a sell. But you should watch for all yen pairs to fall, not just pound yen. Okay. Going back to this is the one price in which you would buy, and this is the price you would look for a sell. So again, for about 2 weeks, the buy zone is held. Now again, it may drop from here, but you at least were able to buy it around 80, and it's made its way to 82. So at least it put in 200 pips for you. Okay, but this is where it'll likely fail, where we are now. And then going to this yen pair, here's your Kiwi yen. Once again, that's the one price. Now, does one thing, okay, you did this one. Yeah, you're right, Chuck. But here's the thing. Some people that are new to this, and I think Iron Man is fairly new, if you're new, what you may be thinking is this move happened and then this line was printed. The interesting thing is when we were up here, we already had this price identified. Okay. Now, I caution people to be very, very cautious that the trend has been down. Okay. And that the sentiment has been down. And that there's nothing here that says buy. However, I also preach to have a long-term bias and not get caught up in, the trade of the month or the news of the month or the news of the moment or whatever it is. So what it was is, if you happen to be a bull, this is the only price in which you would expect this pair to go up. Not any lower, not any higher. If you were looking to get long, you need to start creating trade plans, right? You understand? We're talking about it here. If you're going to get long, you should look for reversal patterns down here. Now, what does a reversal pattern look like? Well, first of all, a whole week has to go by, and finally we hit this. Then there's a double bottom, higher high, higher low, 1, 2, 3. Is that a reversal pattern? Yeah, we call this a hammock. I think there's 2 M's, right? And I think I even discussed it at NFP and did a quick training on it, right? So here it is. There's your reversal pattern. The first one's a double bottom. The other one is a 1, 2, 3. And then off we go. Now, bears had this on Monday. So are bulls going to win? Or are bears going to win? Well, that is yet to be determined, right? But I'll tell you what, this is where bulls were supposed to enter. This is actually a better bearish place, but whatever. This is a bearish zone, right? Because you have the weekly M3 and you have the monthly central, okay? So there's definitely bears there. There's definitely bulls here. So what do you want to do in the middle? It's a little dangerous, but a bull might, a bull, a bull might consider this. Okay, it's dangerous. There's a real fight there, but you can do it. Okay, and you would have had this plan on Monday. If you're trading Kiwi dollar and you're a bull, let's talk about that. Let me zoom in here. If you were a bull on Kiwi dollar on Monday, the market opened here, and you would have said, okay, I need it to drop down to this area. And then if I see a reversal in here, I might want to buy it. It's dangerous though because you're below this low. So you would have really wanted this to go up here. So you got to be very, very cautious. Now bears might have said, aha, they waited and they waited over a week to finally get an opportunity to sell. And then this is their plan. Okay. So which one's going to win? I don't know. But a bull should be cautiously bullish here. But they should also be in here and here. So one is near break even, the one has a small profit, right? And bears are being aggressive. Okay. They should be short there. And then the next one where a bear would sell is here. Okay. Notice that you should understand your challenger's trade plan. Okay. Iron Man, I don't know your bias. I know how to trade. Bulls buy here, and that's clear. Okay. A bull's going to try it again here, but they're not going to be confident. So if you're a bear, you could interpret that as a place to take some profit. Okay. And set up your new bearish trade plan here. We're talking about today and tomorrow now. Later tomorrow and then today, right? Okay. Yeah, and unfortunately I can't stay for CPI, but all right, I'm gonna have to ask you to leave then, dude. If you're not gonna contribute to the group, then just leave, all right? All right. So, in honor of Iron Man 3.0, if you're a bear, you should sell here tomorrow, maybe today. That would be your plan A entry. Your plan B entry would be up here. It's not confusing. No, I've already booted him. He's gone, and all his messages are deleted. Okay? But to anyone else new that's trying to learn, if you're a bear, this is where your first trade should look. You should look to get short. This is your second price. So when you're up in, let's say, plan A, get off the 1 hour chart. This is strategic. Get onto like a 5-minute chart and get tactical. So if this goes up to this A area, okay, and we approach this, and then you see a lower low, lower high, lower low, you need to be short because that's your trade plan. Okay? Simple enough, right? Cool. Unfortunately, I got to go. Thank you for being on my team. Thank you for the loyalty and respect. Rest in peace, Iron Man 2.0. So hopefully you guys can keep focused on the message I'm trying to teach you. How to plan ahead. I'm not talking about yesterday or last week, unless I'm showing you how price is reacting in very predictable zones. Okay? And I do it every day. And every day I say, if you're a bear, you need to come up with bearish trade plans for tomorrow. You need to come up with a plan A and a plan B for tomorrow. What price will you look for your bearishness for plan A? And if that doesn't work, what's your backup plan? So in this case, if you're a bear, you sell at resistance. Where's resistance? Oh, I see resistance here. Good. So plan A for tomorrow would be, or later today, sell up here. Right? Sell up here. There's no hindsight in that. And of course, I'll probably show up tomorrow and I'll say, oh, well, if you're a bear, you sold this role reversal. We're now down here. So we'll look to sell higher up here on the following day. So I'm all about what's going to happen tomorrow, not today. So I hope you see that. The whole point of what I'm doing is that I'm teaching you how to plan things in advance. Does that make sense? No, Jack, he wasn't being. Wait, Jack, and nobody attack Jack yet. Jack, he didn't have a constructive question. All I saw when I looked up the chat was heckle, 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 heckle. At the beginning of the webinar, I said, treat everyone in the chat with respect. I always treat people with respect. But if they're being distractive and heckling and all that kind of stuff and not contributing to the discussion in a positive way, then that person becomes a cancer to the community, and I cut the cancer out. So you could disagree with me. That's fine. That's what trading is. Every time I buy, someone disagrees with me and sells. That's how it is, right? So anyways, it's not so again, I don't care about the criticism. I care about being a positive contributor to the community. Okay. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team and all that kind of stuff. I will be here tomorrow and the next day and the next day, all that kind of stuff. Been doing these webinars on YouTube for how long is longer? I was a beta tester in YouTube. Let's just put it that way. So I've been here a very long time. Feel free to ask questions. Feel free to drill down as much as you want. I'm happy to share. Take care.